We are now in the busiest home buying and selling season. So, what are the current stats telling us about the housing market? We had a retro month of May. And no, not the June 5th, October 8th Venus in retrograde, and I don't even know what all that means. Or retro back to the 70s prices and interest rates. What's really going on is that the May 2023 stats for Hamilton County, Indiana, in the Indianapolis area are very much like July of 2022. Spring or summer? It's time again for some property sales prognostications with, of course, some random thoughts from me about the national housing market thrown in. So first, let's take a look at the current Hamilton County, Indiana numbers, and this is only for Hamilton County. The sold listings for May of 2023 were down almost 21% from April, but up over 24% year over year. New listings at 646 were up 32.8% from last month. Yay, we need all the listings we can get. However, these new listings were down almost 14% year over year. Boo! The total active listings, that's the number of houses still on the market at 456, went up from 17.8% from April. And that's up a needed 43.8% year over year. The median price leveled off at a zero gain from not only month over month, but year over year. Was it at $450,000? We haven't seen a lack of gain in the median price year over year since June of 2020. Is the market finally slowing down? In my opinion, we need more information than just this one month. If this trend continues, then it's time to once again evaluate the overall market trajectory. Another indicator, however, of a slowing market would be the combined days on the market. Hamilton County did experience the highest gain since the December holiday winter market of last year. This month, the days on market were up to 51 days as compared to 40 last month. That was a whopping 363.6% increase from May of 2022 when the days on the market was only at 11. Even though some of these stats may indicate a slower market, we are still staying in a strong seller's market. A neutral market is 4 to 6 months of available inventory, which is measured by a calculation called the absorption rate. That's the number of days that it would take to sell all the current inventory. For May, the absorption rate was at 0.9 of a month, or 27 days, which is only slightly lower than the 1 month rate in April. Let's take a look and see if the current nationwide stats reflect our housing market. According to Redfin, new listings were down more than 20% from a year ago as homeowners hold on to their low mortgage rates. In other words, if a homeowner does not have a life-changing event or urgency to sell, they're staying in their homes due to their believing that the higher mortgage rates will make it difficult to buy another home. This is creating lower inventory levels nationwide. On the other hand, it is also creating a buying frenzy with buyers battling for the few homes on the market. Many markets are experiencing multiple offers. All this combined is keeping home prices from drastically falling. Nationwide, we are seeing the U.S. median sales price go down about 2.8% from last year. Here are some other very important nationwide stats. 47% of the homes that went under contract had an accepted offer within the first 2 weeks of being on the market. That's the highest level in nearly a year, and 30% of those homes sold above their final list price. Finally, the current absorption rate nationwide, and that's the months of supply, is at 2.7 months, meaning that it would take almost 3 months for the current inventory to sell at the current sales pace, which is still a seller's market. Let's compare these year-over-year stats. Here's a chart. Take a look at it. New listings, Hamilton County, down 14%. Nationwide, down 20%. Sales price, Hamilton County, zero change. Nationwide, down 2.8%. Absorption rate, Hamilton County, 0.9 of a month. Nationwide, 2.7 months. Seller's market, Hamilton County, oh yeah. Nationwide, you bet. It seems that our local market is experiencing a tighter, less volatile market and may start slowing, but at a slower pace than the nation as a whole. So here's your cliff notes for this month. Buyers, time to start your search. If you are concerned about the interest rates, thinking they may go down, I would make two suggestions. One, if rates do go down, refinance. Rates have been at an all-time low for about 25 years, and I believe we are on a multiple-year upwards climb. Two, if rates continue to climb, kudos to you for locking in a lower rate and creating equity. Remember, real estate is still one of the best investments over the long term you'll ever make. Start building equity. Sellers, time to start prepping your home. You can still get top dollar if you position and prepare your home properly. Add in our top-notch digital and AI marketing strategies, and your home will have maximum exposure as well as access to all of our innovative strategies. If you are wondering what your home may be worth, I'd be glad to do a market analysis for you. Just message me your address and I'll get to work on it right away. As always, if you are contemplating selling or buying, contact my team and I today so we can go over all the latest housing data with you locally and nationally to put you in the best position to move forward. If you'd like to check out my seller's guide, just pop a yes, that's Y-E-S, in the comments, and I'd be glad to send it to you. Signing off, it's Susan Roberts with the Roberts Real Estate Group, brokered by eXp, your best friend in the business. See you on the other side of sold.